Hi, and welcome to What's Next Wall Street. I'm George Alfredas.
And she is the giggling George. I'm Dave Mathews. This is a show about stocks, crypto, and the new decentralized financial Web3 world all around us.
Let me tell y'all something. If you knew what happened in the backgrounds, like literally one of the production guys just said, man, I could really use a drink. What is wrong with y'all? The mics are on. I've got details on all the hot new trending products that everybody's talking about using and investing in. And today I'm telling you what the tops of the tops are, like top companies to work for, because that's important when it comes to investing. I know you're like, well, why? I'll tell you why coming up.
I'm wondering why, but I'm going to tell you why you may soon care about a decentralized autonomous organization.
Say that 3 times fast.
Well, so it's a DAO.
Oh, okay.
Right? So it's like a company without the CEO.
Ooh, I like that.
That's weird.
Yeah, we've got Greg, lead instructor at OptionsPlayers.com, as our expert. What Greg does is chart a lot of these companies that we talk about, and those chart indicators can show where a particular stock is headed so that it's easier to target investment potential. So Greg basically combines technical analysis with fundamental knowledge.
All of this is our goal to provide you with education, information, and tips to help you become a more informed trader with a tailored trade plan.
Yep.
So you can easily stay up to speed with what's next on Wall Street and stack some financial gains.
That's what it's about, right? So you can email us at OptionsPlayers.com or hit us up on social media at What's Next Wall Street with your questions. We've been getting a lot too. Thank you for those. We can also direct you to instructors and experts over at OptionsPlayers.com who dig into trading fundamentals.
Now, you can watch this episode on the OptionsPlayers.com YouTube channel and or listen to the podcast on Apple, Spotify, or wherever you get your funky podcasts.
Yes, so wherever you're listening to these funky podcasts or watching on YouTube, do us a favor, subscribe, hit the alert button so that you always know what's next on Wall Street. And if you like it, and what's not to like, give us 5 stars. Dave, how do you truly know that you have made it in America?
Live on an island. Well, that's not America. I don't know.
Yeah. Okay. Well, you don't get audited. A new report that we really didn't need because we already knew this says that the wealthiest Americans do not get audited as much as everybody else. The Government Accountability Office says that only 2% of the very wealthy ever get audited. So who gets audited the most? Those making under $25,000. So the lowest wage earners get taxed at a rate of 13%. So 13 out of every 1,000 low wage earners are taxed, or actually audited. Half of that 13% actually filed returns claiming an anti-poverty earned income tax credit. So the IRS is blaming staff and funding shortages.
Wah, wah.
Yeah, the agency's budget for the 2021 fiscal year was just under $12 billion. That's down 25% from what it was a decade ago. So who cares, right? Everybody hates the IRS, except that according to the this ProPublica study, the U.S. is losing $18 billion a year by auditing the poor instead of the rich. I'm just thinking, what could America do with that extra $18 billion bucks a year?
I'm feeling a little Robin Hood there.
I know, right?
Hey, and in this news, potential Walmart workers could see themselves in a higher tax bracket, probably those lower waged people going to get audited too. Well, Walmart is aiming to help recent college grads become store managers through a new training program called College to Career.
Okay.
It's designed to put graduates in charge of a store within 2 years. Wow. Those who earn the title of top performers will be offered an emerging coach position with a starting salary of $65,000.
Oh, wow. So they won't get audited.
Yeah, right.
I mean, that's a lot. That's awesome.
Yeah, not bad out of college. I think
Yeah.
that's what I made back in the 90s. But
I made
anyway.
my first contract in radio was for $22,000.
Wow, it must have been AM radio.
It was FM, but it was like, you work like 4 hours a day. And then the next one, I was so excited because it was 24,000 in the 90s, right?
Amazing.
Yeah. So Walmart is on LinkedIn's recent list of the 50 best companies to work for. Speaking of Walmart, it's actually number 5. Who is number 1? Duh, Amazon. Amazon raised wages for workhouse employees and doubled the base salary for those in corporate and tech. But what about the whole union issue? This is what I want to know, Greg. Isn't that union issue hurting Amazon just a little bit?
Normally, when a company does form a union, it will affect their bottom line. But with Amazon, current market, you just never know. They're looking, 10, 20 years out in advance on these investments. So they're expecting that somehow the union and treating people a little bit better, meeting those, Maslow's hierarchy of needs per se, that it's going to do better. I don't know. We can see in the future of how many companies have really made it through with unions in the past, but we're kind of in a different era now than we were. Unions were huge in the 80s,
Oh, they were
right?
huge. Iron workers, postal union.
Kroger,
everybody.
everybody was in a union. And then we kind of got into this non-union globalization, sent everything overseas. Thank you, late 90s. And now we're kind of getting back into that socialist, let's say socialism era where we're wanting more people to have a say. And that's kind of the woke thing to be in. I'm just going to say.
I'm going to
so
disagree
now
with you on that,
it might be beneficial because it's kind of unions don't really fall into the the corporate responsibility area of environmental things like that. But it's becoming a huge thing on how your company is perceived is how well it does, right?
That's right. That's right.
And we're very split politically and everything else. So you don't want to be one side to go against you or the other side. So.
Got to stay in the middle.
Yeah, you
How
got to
do
stay
you
in
do
the
that
middle.
these days? How do you stay in the middle?
So
We can blame Jack Welch for this. When Jack got rid of all the corporate employees at GE, his nickname was Neutron Jack because he was just blasting everybody with neutron bombs. So, man. All right. So, what pandemic surge with travel? Tourists are flocking to Florida in big numbers. Officials say around 36 million visitors made the trek to soak up some winter sunshine during the first 3 months of this year.
I wish I'd done that instead of being skiing. It was like 5 degrees. Why did we go to Miami?
Well, remember the first year of COVID, spring break was over the top there and people were freaking out shutting down beaches. So the move of tourism was more than 1% above what the state saw during the same period before the 2019 pandemic hit.
Oh, wow.
It's nearly a 40% jump from the same time a year ago. But, when you're going to jump from nothing, where are you going to jump from?
Yeah, exactly. Okay.
Today's pro tip is brought to you by OptionsPlayers.com. Your competition spends hundreds of hours perfecting the strategies you are in for a rude awakening if you expect to throw a few darts and walk away with a profit.
Oh, that doesn't work.
The only way to achieve long-term success is with hard work and discipline. Time and money invested in your education will definitely increase your win rate, so don't think you can just wing it. Treat trading like it's your business and only stream of income. So pay attention.
Yeah. Okay, this is the part of the show where we get to hear from you, we get to hear from us. Well, you get to hear from us the whole time, but I'm just saying directly. You can always hit us up on social media at What's Next Wall Street, comment on our YouTube page, or email us at www.optionsplayers.com. This first email is from Bo C. I love the name Bo. It's so Southern, Bo. Okay, he's got two, one for Greg and one for Dave. So Greg, when you're watching a chart, do you use RSI and MACD? Is it MACD? If so,
MACD.
MACD. Okay, so if so, what relationship do you like to see between the two?
I don't really use either one of those.
What are these acronyms?
Yeah.
So MACD, all right, what you're really talking there, that really tells you the relationship between two exponential moving averages. Okay? Yeah.
No, not
it's
Mickey
McDonald's.
D's, not to be confused.
That and RSI is the relationship between past high prices and low prices. So RSI usually tells you if something's oversold or overbought, right? If it's a little crazy. While MACD can say, hey, this is really trending up, this is really trending down. And a lot of people will use those with other like ADX and other momentum things to try to guess it. So essentially what you're looking for is something that's saying that it's about to go up. The relationship in the moving averages is still positive, so it's trending up. And then the RSI says it's below 30, so it's a little bit oversold, so you'd want to purchase it. I don't use either one of them. I know a lot of people do. It's just I'm not against them. I just, I have my own system. It works, so
Don't fix it if it ain't broke.
Yeah, why am I going to mess with it? But we do have, at Option Players, we have an individual that does a lot with MACDs. They're both named Michael, so I guess it's not going to be wrong either way. And the other one does a lot with RSIs, like overnight hold play with RSI that's pretty profitable. I don't do it because they kind of do it, so nobody ever asks me that. But
Okay.
I'm more on some other price action and momentum plays in RSI and MACD.
And that's the secret sauce that we've talked about on other episodes of the show.
Okay, exactly. Okay, here's your question, Dave. Do you see any beginnings of a consolidation in the crypto or NFT space with regard to new coins or perhaps NFT projects being brought under one design studio?
So this is a good question because we've seen consolidations with other studios coming together to build let's call it consortiums of this artwork. You've got coins like Cardano that are going through some revitalization with being around like NFT purchases. I'm going to talk later in this episode about DAOs, where a DAO will be a group of people with a collection of assets. But I think what I would look for, and we're going to have this on next week's show, so be sure and tune in. We're going to talk to a group that's building a platform for art to be created on it. So I think we're going to see more of that, more of these ideas for easy ways to create the art, where in the past, services like OpenSea would be an easy way to sell the art. Now, the whole idea with Web3, though, is decentralization and not having it all under one banner. But with venture capital money going into these projects, what you're going to find is the VCs will like consolidation because you'll have similar investors going into multiple projects that might get merged. Remember, with investments in VC and the startup world, it's all spray and pray. Investors put a lot of angel money in these things, and when they start to see traction, they double down on them. So as groups fall out of, let's call it vogue or profitability, then these groups, these founders will merge into other more successful groups. So consolidation is a natural in this. But yes, tune into our show next week. We're going to have a little deep dive into these platforms, which I think is where we'll see the real consolidation.
All right, good question. If you've got questions, hit us up on social media, or of course, you can hit us up on our YouTube page at What's Next Wall Street.
All right, Georgia, I've got another nerdy acronym for you.
Oh gosh, here we go.
Yeah,
okay,
you like
what
this.
is it?
It's called DAO. Now it's spelled DAO, which stands for Decentralized Autonomous Organization. Now this starts with a group of people who take a blockchain technology and attach an asset or a financial structure on top of it.
All right.
Now this is normally organized from a group chat, ironically, and the tool they usually use is the website Discord, which unique about this though is a bank account is created like a co-op, and people buy or invest into this bank account. So it's kind of weird. Now, personally, I work a lot in the startup company space, which is the analog version of this. See, startup guys form an entity based upon an idea, like for a new app around delivery or whatever. They create a corporation or an LLC,
right,
and then they get investors, which comes from a group of friends called early money angel investors. Now, for a DAO, that's just like a corporation or LLC, but the asset is something they want to purchase or make to then own. And the angel investors, they're the ones putting the cryptocurrency in. That's the equivalent there.
Okay.
And they believe in the concept from the chat group on Discord. So does this make sense?
No.
Well, here's where it gets interesting. A DAO is not like a corporation, which is run by its CEO or board.
Okay.
But it's run by the owners or the investors who hold the tokens on the blockchain.
But that's kind of like, investors, the board is they're the ones who run everything in a company.
Yeah, but if you think about it, if you're investing in Wall Street, you're not the board, right? So you're not running the group. This is a massive difference from companies. Just look at Meta, where the founder, Mark Zuckerberg, uses a special share class. So he'll always maintain control of the organization, and he has the ultimate decision on his whole company.
Right.
So it's not like his even board of directors has control. But like everything else in the crypto world, this is still Wild West, and people are getting rug pulled here with DAOs as well. Take, for instance, the group Constitution DAO. I think it's like Constitutional, but DAO. And they raised $45 million over the span of a week, $45 million to buy a rare copy of the United States Constitution that Sotheby's was auctioning. Now, in the end, they didn't win the auction, and there was even some controversy of trying to give money back to the members who put in that 45 mil. Now, the idea is if they pulled off the auction winning, they could state where this piece of paper could be exhibited or shared. But with a tangible asset, especially of that value, think about how tricky that would be.
Listen, we shouldn't even be selling that. That should be like in a museum. Like,
was a copy.
Well, I got a copy. I just printed it off my computer. Anybody want it?
Yeah, it was a famous copy. But all right, but when it comes to digital assets, like maybe NFT art, a DAO to me makes more sense for group ownership, as that can be split and shared electronically based upon decisions made on the blockchain as a public auditing record. Remember, the blockchain's just a public ledger here. Now, this isn't the first time group buying of stuff was popularized. The founder of Groupon, Andrew Mason, attempted this in the late 2000s with his idea Tipping Point, where people could buy into an idea to later be executed. Now, one of his was putting a physical dome over Chicago to keep it warm in the winter, which is exactly why I never wanted to live in that city.
Exactly.
But he moved that model from there into what we know as Groupon. Now, Groupon was a combined word pair of group and coupon, which was a model where you could get sandwiches or massages for a period of time to drive customers to a business at a discount. Now, much easier to tactically execute that than putting a dome over a city. And then look at Kickstarter and Indiegogo. They both allow crowds to get behind ideas that become products. Again, many of those investors who are really buyers of said products are left high and dry when the company runs out of steam during the product development cycle. This is why the adage for inventors, hardware is hard, really resonates with me. Look at this. This is a cat brush that is a liquor, they call it. So it's just like cats brushing themselves. Anyway, I'm a hardware inventor, and that one's ridiculous.
What is this even doing here? What?
That was a Kickstarter, a bad one. Yeah. So,
okay.
Based upon seeing these bad...
Make your cat like a cat. Who decided? Who came up? Maybe it's the slogan.
It was a Kickstarter.
Licky brush is what it's called.
These are bad ideas, right? So, just like the bad Kickstarter and Indiegogo ideas, take care with these DAOs. Make sure you trust the team, because the outcome that follows could be feast or meow, feline. Oh, I meant famine.
I get it. Yeah. That is, no. Earlier we talked about LinkedIn's list of top U.S. companies to work for. It's actually a pretty extensive list, and it includes the top companies from 35 different countries. However, let's just talk about the U.S. Amazon is number one on that list for the second year in a row. Apparently, they have lots of advancement opportunities, so they're able to get and keep good talent. Google, number two. You know what? I did an in-house commercial for Google a few years ago, and I remember thinking how cool it would have been to work there in my 20s. As a young person who could stay at work all day and didn't have kids or a husband. It was the coolest. I was like, y'all work here?
That's because they do your laundry. They feed you.
Oh my gosh. I could just walk into what was like a store and grab food, and it was the best. I was like, this is cool.
You know what I heard? Because of the pandemic, a lot of people are just going in to work like an hour or two around lunchtime. And then they bring home plates of food to bring home to their families. Ridiculous.
Right. And now Google has this hybrid work model, which everybody has kind of adopted these days, just like you just said. So Wells Fargo is also on the list. They're number 3. They're on track to hire thousands of people this year. They are one of these companies that does tuition reimbursement, which is really a big deal to millennials and everybody. Number 4 on the list, JP Morgan Chase. Chase has been making news for being inclusive in their hiring practices. The company says they like to hire groups that are underrepresented in their workforce, but are actually present in the local population. So, Greg, this is all right up my alley. Give me a company with a good story, raises, hiring people on the spectrum and also disabilities, giving women and minorities a seat at the table. Hello, I'm pulling up. Helping college grads get that first good paying job, supporting the military community. I am here for it all. But Greg, here's what I need to know. I want to know if these elements make a difference to investors. Should I be investing in these companies with these qualities? I mean, I'm going to do it anyway because, it just makes me feel good. But what about everybody else? Quick answer. What do you think?
There's a few reasons why. First off, it's a great marketing tool, right? So if you don't have some type of CSR or corporate social responsibility, that's an issue. Like we've already discussed earlier about the wokeism currently going on. And it's always kind of been that way. Say the government wants to come after a company, let's just say PepsiCo, because they use a lot of water. But then they have some type of environmental corporate responsibility that they're helping that kind of alleviates it, right?
Sure.
But really, even hiring new people like that, it comes back into that social part, and it really does help. But fundamentally, if you're doing all this, what does that say about your company? It says that your company is doing well, that you can spend extra money, go out and hire individuals that might not be the exact best, but you could put your faith in them and train them. So if you got the money to spend on corporate responsibility and things like that, you're probably making a good profit. So investors can look at it and say, hey, they're doing good enough to spend money on these extras. They're probably pretty sound. And if things get hard, guess what? They can tighten the noose on the extras and then just get back to the basics. But, so a lot of investors do that. And about 60% investors look at whether the company is, has some type of corporate responsibility. You saw that when I forgot the EFT that pulled Tesla off of it, saying they weren't environmentally whatever anymore. Yeah,
friendly. We call it environmentally friendly.
There's a lot of things like that, but it is what it is. So there's a lot of funds out there that are like that people want to invest in. And then, of course, government money, where the money is,
That's right?
So if you're in that corporate responsibility thing, take Tesla, for example, or EVs in general, you get that tax rebate. Those are corporate responsibility things that you can look at. And it's the same way with disabilities, military. There's a lot of them out there. You hire an individual military that has a disability that's been unemployed, you get tax benefits. The same way with individuals with other disabilities or on the spectrum. A lot of times those companies actually get tax rebates on those. It might not pay for it all, but there's also a financial side to that.
Okay, so it makes sense about your community and your world.
Yeah, just think about it. With the Great Resignation, a lot of people were making enough money staying at home thanks to the COVID government bailouts on employees.
How much did you get? Because I feel like you must have gotten like tens of hundreds of
nothing.
thousands.
I lost my job making $1,000 a day in New York, and I moved to the Ozarks and had the best summer ever fixing Sea-Doos. But the people that made the government subsidy money, the whole Great Resignation was because, like, wait a minute, we're making good money. I don't need my job that was ripping my soul away. So think about it. All these great companies to work for, people are finding their purpose in life. And there's been there's been a massive amount of influx of people starting their own companies in their 30s, 40s, 50s, and 60s because they got away from a job that was pulling their soul away.
9 to 5, 40 hours a week. And,
Well, you work more. You work for yourself 80 hours a week, but at least it's where your heart is.
It's for you.
Speaking of heart, we'd like to thank lead instructor at Options Players, Greg Krause, for being here in the studio with his heart today.
Yes, remember, if you've got questions, we can try to help you answer them, and we'd love to hear from you. Email us at www.optionsplayers.com. Hit us up on social media at What's Next Wall Street.
You can, of course, watch episodes of What's Next Wall Street on the OptionsPlayers.com YouTube channel, or listen on Spotify, Apple, or wherever you get your podcast. And tell your friends about us, subscribe, hit the alert button, share, high five each other.
Yeah.
You know what? I'm Dave Mathews.
And I'm George Alfredas, and we will see you next time on What's Next Wall Street.